Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schiller here in studio at the Stock Exchange. Well, investors are hoping for a bounce back today, and that's what futures are indicating after the Dow did tumble yesterday, hitting 10 straight days of losses for the first time in 50 years. Comes amid the Fed's decision, but of course, the economy continuing to hold up. We'll talk more about that in today's show, and here's a look at what is on tap in the next hour. Well, the Federal Reserve, as expected, cut rates by 1/4 percentage point yesterday. But it's what the central bank said afterwards that sent the major averages into volatility. NYSE senior market strategist Michael Renking will weigh in on what to expect going forward. And with the 10-year Treasury yield soaring to about 4.5% after the Fed's latest move, JP Morgan Chase's Nina Gidwani tells me what to expect when it comes to mortgage rates entering 2025. Plus, TikTok heads to Washington in hopes of preventing a U.S. ban. The Supreme Court says it will hear arguments that banning the social media platform would be unconstitutional. An attorney will join Trinity Chavez on what we can expect. Back to our main story, though, that of course is the Fed, and it's why the major averages were on the move yesterday and this morning. Well, as we've covered extensively here on the show, the Fed lowered interest rates for a third straight meeting to a range of 4.25 to 4.5%. It is what the Fed said, though, that triggered investors, and that was as it related to its outlook. So instead of 4 rate cuts next year, the Fed signaled it intends to cut rates just 2 times. Here's what Fed Chair Jerome Powell had to say.
I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation inflation will be higher.
That was, of course, remarks from Fed Chair Jerome Powell in his post-decision press conference. Well, joining me now to break down the action is Michael Renking, senior market strategist here at the New York Stock Exchange. Michael, always good to see you, especially after a very big day for investors and the Fed.
Yes, yeah, it was definitely a big day yesterday, and I would say a little bit surprising, and definitely surprising to kind of what investors were expecting kind of heading in, but not necessarily in the decision that we got, but I think it was really more so in the reaction that we saw within markets, right? Mm-hmm. So. Investors were looking for that 25 basis point rate cut. And if you looked at futures probabilities, they were actually expecting the Federal Reserve to only cut 2 additional times heading into next year. So that was exactly what was delivered in the SEP. Mm-hmm. But what you did start to see was that the Federal Reserve message that they were much more concerned about inflation going forward than they had led on previously, right? Mm-hmm. So I think that was where markets were really kind of focused yesterday in that response. I also do think, and we could talk more about kind of some of that mixed messaging, but I think part of what we saw within equity markets is there was this expectation that this would be a clearing event, which would allow equity markets to resume to the upside heading into the end of the year. We didn't get that response by any stretch of the imagination, and I think heading into the end of the year, you did see some traders kind of throw in the towel.
Interesting. So what does that mean then for now into year end and early 2025 in terms of how we might see positioning adapt in the wake of this news?
Yeah, so I mean that's like the concern from here, right? Because we do move into a little bit more of you see kind of the trading environment gets a little bit, you see volumes start to thin out heading into the end of the year as people start to leave, right? And given such a strong year, right, people are looking to lock in some gains and say, you know what, like if we're going to have this volatile environment, why do I necessarily need to kind of step out on a limb from here? I can just take down exposure. We saw the VIX move into the high 20s, which is a kind of a crazy move in a one-day move, in response to what we had seen here, and that creates some kind of just systematic de-risking kind of within the marketplace.
Mm-hmm. So I want you to break this down for us, Michael, as our resident expert here on the trading floor. How is it that the economy is strong and Powell's saying he's, quote, very optimistic, end quote, about the economy? Of course, it's one of the reasons that we see inflation continuing to be sticky, and yet the market would respond to the downside in the wake of that news.
Right. So you actually hit the nail on the head, and that was part of the problem that we had yesterday, is that there were so many mixed messages that were coming from the Federal Reserve. They said, okay, the economy is performing well and the labor market is moderating, but it's better than we had expected. Yet we're cutting rates, right? And we're looking at inflation expectations for next year that are moving higher, right? So the data didn't necessarily fit with the Fed's reaction. Now, interestingly enough, we saw a dissension, the second dissension, kind of in recent times. But if you looked at the dots for 2024, there were actually 4 officials that were pushing for no rate cut yesterday, right? So there's quite a bit of dissension in the room.
Interesting. I want to talk more about inflation. Of course, any American shopper knows that inflation has been sticky, both from a goods and a services perspective. It was interesting that Powell noted that potential tariffs, as the president-elect promised on the campaign trail, were not yet factored in, presumably so, to this inflation forecast. And so what more can we glean about these clues for our viewers about inflation?
And so that was also a very interesting point during the press conference yesterday. It hasn't got so much play yet, but the chairman did say that some officials had started to factor in potential Washington policy into their inflation expectations. Some had said they didn't, and some didn't give him an answer as to whether they were or weren't, right? So just adding to this mix of uncertainty and questioning in terms of what we're actually looking at. He also went back, interestingly enough, and pointed to the Teal book from 2018, where the Fed ran a scenario analysis looking at how they should react to tariffs. Right, so he's starting to point us in the right direction and to understand how the Federal Reserve may react going forward. There were some small dovish takeaways from that, with the Federal Reserve suggesting that if inflation expectations stayed anchored, right, and those price increases were short-term in nature, that you could look past tariffs, right? But it did bring kind of Washington to the forefront, within the press conference, which is not something you necessarily wanted to do, right? Where you can kind of get right back in the crosshairs of President Trump. One other thing I would highlight into the weakness at the end of the day, yesterday, right around 3:30ish, that stopgap funding bill for within Congress also fell apart, right? So that added to some weakness in the sentiment, as you see that the very kind of slim margins in Congress, right, is going to make it difficult for the president to push forward his policies next year. And
could that mean a potential government shutdown?
There's a possibility, but I think we'll work past that, right? I think more so that the question just really remains: how are we going to? They have a very aggressive agenda that they are trying to set out in that first 100 days and getting into, as President Trump takes office. And it's going to be a difficult time period it's going to be difficult for them to move that through.
Michael, I wish we had more time because there's so much to digest today, but always appreciate your time, of course, joining us here on set ahead of the market open. That's Michael Ranking, a senior market strategist here at the New York Stock Exchange.
Yeah. Thanks for having me, and have a happy New Year if I don't see you again.
You too. Happy holidays. All right, well, coming up, while the major averages were volatile in the wake of some of these mixed messages, as Michael mentioned yesterday, yields did soar. We'll find out what it means for the housing market up next.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honor, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement, that extends from everything from community to ESG in general to environmental stewardship. And they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Hekla that really is driving forward the company's success.
Now, what strategic direction would Hecla take under your leadership, and what will be some of your key priorities for Hecla?
As the largest silver producer in Canada and the United States, Hecla really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio, and that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation, and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. While the Dow and the S&P did see volatility yesterday, we do see those major indexes on the rise pre-market today as the 10-year Treasury yield soared to its highest level in more than 6 months. Well, at the end of yesterday's session, the U.S. 10-year Treasury yield hit 4.5%, the first time since late May that we've seen the 10-year end a day above that threshold. Well, joining me now with more, and specifically what this means for the housing market, is Nina Gidwani, head of refinance and home equity for Chase Home Lending. Nina, thank you so much for joining today. Of course, a busy session for market participants in the wake of that Fed decision. Based on what we learned yesterday, what does that mean for the path forward for mortgage rates?
Well, thanks, Kristen. It's great to be here, and thanks for having me. And so, yes, yesterday's announcement of the quarter-point rate cut didn't surprise the market, but I think what is more surprising is what it means for the future and what's the rate outlook going to be next year. And I think, obviously the thing that we like to focus on with our customers is, what you can control, which is your own financial preparedness, getting ready for home ownership, understanding, what you can afford. And yes, there will be some volatility going forward here in the market, but control what you can is sort of our message.
And as we look to round out 2024, Nina, what are some of the trends that you're seeing within the housing space that may carry over into 2025?
Yes, I mean, one of the trends we're obviously seeing is this volatility, Kristen, and I think that has been a marker of 2024. I think we could expect some of that volatility to continue into 2025. But one of the bigger trends is around affordability for our customers, which we obviously care a lot about. And so, today, if you're a first-time home buyer or, someone looking to buy, you're faced with elevated home prices, diminished housing inventory and more competition for that inventory. And then you pair that with the cost of home ownership, not just higher rates, but expenses, taxes, insurance associated with that. Those things alone could take up to 35% of your take-home pay. And that is a very significant challenge for many customers, and one that we care deeply about.
Interesting. And, well, of course, we know that the spring buying or selling season, however you want to cut it, will be here before we know it, usually an active time for the housing space. What is your expectation when it comes to home buying and refinancing?
Yeah, I mean, I think, Kristen, we're going to see home buying continue. At the end of the day, customers do need to move. They need to, take on new jobs or move across the country. And so that will continue. And I think there'll be home buying requirements across the board for customers. What we do hope to see, and I'm hopeful that we'll see some episodic rate improvements and some relief over the course of the coming year, where customers may be able to take advantage of a refinance, and lower their mortgage payments. We saw that in September, a slight reprieve in mortgage rates. And we hope to see that going into 25 as well.
We've seen the consumer remain very strong, very active. Certainly the GDP number that we got, a revision for the third quarter this morning, Nina, before the market opened and the show began, indicated that with U.S. GDP growth of 3.1%, up from a prior read of 2.9%. What's behind this consumer optimism?
No, I think part of this is all signaling that, the economy in many ways, and the Fed said as much, is still strong, and consumer sentiment and consumers are still spending. And the other thing we're seeing is that there is a little bit more getting more accustomed to higher rates. And we've seen higher rates for longer here, which may be a sign that, again, customers are sort of grappling with the fact that they will, if they have to enter the housing market, do so at a higher mortgage rate. And that lock-in effect that you see with many customers, who are sitting on a low rate or an ultra low mortgage rate today, we may see that soften over time again as customers get more accustomed to this new environment, knowing that they can refinance into the future if that presents itself down the line.
For our viewers watching, Nina, what would you say is a way that they're able to keep home buying affordable in this market?
I think there's a couple of things that they can do, Kristen, to make home ownership more affordable. One is to look at assistance programs that are out there. Many lenders offer these programs. These are home buyer grants or down payment assistance programs. Chase offers a home buyer grant of up to $7,500 when you're purchasing a new home in over 15,000 areas across the country. And so you want to look at those sorts of programs that might offset the cost of home ownership. In addition, there's low down payment mortgage options. And, again, Chase has a Dreammaker product with a down payment as low as 3% and flexible credit guidelines. Many lenders offer those as well. And then lastly, I'd say, Kristen, as a consumer, make sure you shop around. Make sure that you ask lenders to compete for your business, compare and contrast the options you're getting so that you can get the deal possible.
Nina, anything else our viewers should know as we look to round out 2024?
No, Kristen, I think, again, we have some optimism about where the market will go next year, despite, some of the pronouncements yesterday. The economy is strong, the market is strong, and at JP Morgan, we're here to help our customers achieve their home ownership goals, and that is our primary goal going into 2025.
Nina Gidwani, thank you so much for joining, of course, after a busy week, including that Fed decision and GDP report this morning. Nina's the head of refinance and home equity for Chase Home Lending. All right, well, after the break, social media platform TikTok will make its case to avoid a U.S. ban. We'll have those details up next. Viewers, a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware. And then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially...
Together, we built something truly beautiful in the true iconic notion of what America is all about.
This is our task, this is our mission. We have a clear focus and we have the ability to be agile and innovate.
It takes years of dedication to get us to this milestone. It is all because of you.
Never doubt that a small group of thoughtful, committed citizens can change the world. It is the only thing that ever has.
To be a woman leader, it's not so easy, but it's easy if the passion and the love is coming from your heart.
The New York Stock Exchange is the symbol of what America is all about. Potential of capitalism, the potential of an American dream.
The only way you can move a society forward is a true expression of freedom.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller in studio. Well, TikTok is making headlines, but not because of any particular videos trending on the app. My colleague Trinity Chavez has more. Trinity, good morning.
Kristen, that's right. So we've been following this story, and just yesterday, the Supreme Court said that it will hear arguments from TikTok that banning the app would violate the First Amendment and thus be unconstitutional. The Supreme Court scheduled oral arguments for January 10th, and this is noteworthy because Protecting Americans from Foreign Adversaries Controlled Applications Act, which would ban the app in the U.S. if TikTok parent company ByteDance doesn't sell, is set to take effect January 19th. And so we're going to be talking about all of this and so much more with Herming Wong. She's a lecturer at UC Berkeley in just a little bit, Kristen. But right now we're about 9 minutes out from the opening bell, and we've been following the markets. As you said, Jerome Powell spoke yesterday afternoon, which we heard in your earlier conversation. Following the Fed decision, those 2 rate cuts to be expected come the new year. What else is on your radar?
That's exactly right. So we have been following the markets very closely here, an action-packed week, as you and I have been preparing for, and that's because in addition to the Fed decision and outlook, we have a whole host of economic data that's been rolling in, including that third quarter GDP report this morning, another revision showing, in fact, that growth was stronger than expected last quarter. That's for the months of July through the end of September. That U.S. GDP growth of 3.1%, higher than an earlier read of 2.9%, and that was on the back of consumer spending. So a lot of what we heard from the Fed yesterday is, yes, that Powell is, quote, very optimistic, end quote, about the economy. That coincides with high prices because consumers are willing to spend.
Yeah.
Trinity, I do think we have our guests, so I'm curious to hear more about where we stand on this TikTok story.
Oh, absolutely. And as I said, Herming Wong, she is a lecturer at UC Berkeley, joining us now to talk more about this story that is making headlines around the world. Herming, thank you so much for joining us today.
Thanks so much for having me, Trinity. It's great to be on the show.
So let's start by talking about what exactly are the primary legal arguments that are being presented by both sides in the TikTok ban challenge.
Yeah, great. So we've got kind of a prisoner's dilemma going on here for the Supreme Court that's been teed up. On the one hand, there is the government that's saying that there's a national security interest with TikTok and the fact that China owns TikTok. And then on the other side is a First Amendment issue that TikTok is claiming, hey, this infringes on our right of First Amendment speech, and it infringes on the right of all of our users and their First Amendment speech. And these are 2 competing interests that don't have an easy way of resolving themselves typically.
Now, Herming, I do want to talk about the timeline here because it's all very fast. An emergency appeal was granted by the Supreme Court, and they're going to hear arguments on January 10th. And then this is also supposed to take place again on January 19th. So talk to me about the significance behind this timeline and what we should expect.
Yeah, so this is as you say, a very compressed timeline. We don't typically see this out of the Supreme Court. And so this gives you a sense of how critical the court thinks that this particular issue is. So they're taking it up. It was just handed down by the DC Circuit. The appeals court heard it, and they just gave a decision on December 6th. So now the Supreme Court is taking it up, and over the holidays, they're expecting the government and TikTok to be giving them full-fledged briefings on this, and an oral argument that they've extended to 2 hours long on January 10th, because the act itself is supposed to take place on January 19th, as you said. So TikTok is saying, hey, we're going to suffer irreparable harm if you don't do something about this, Supreme Court.
And you know, when President Trump was in office last time, he actually issued an executive order trying to ban TikTok. But now, does it seem like he's doing a completely 180? And why do you think that is? What do you think is the driving factor behind his thought process?
Yes, the President-elect Trump is definitely doing both a 180 and not doing a 180. And he's doing a 180 on the merits. Part of that was because earlier his own executive order back in 2020 was ruled unconstitutional by the courts. This is why this new act has come in place. It's meant to be more narrowly tailored to address the constitutional issue that the First Amendment brings up. But then why is he also doing this 180 on kind of the practical grounds? One, TikTok has a huge following for President Trump now, and he believes that he's got a huge youth vote after this election, and TikTok is incredibly popular there. He also probably believes that once this gets implemented, and this is really important to remember, the act we talk about as a TikTok ban, you'll hear a lot of members of Congress talking about it not as a ban, but trying to get TikTok to be divested from Chinese ownership and bought by some other ownership, preferably a U.S. ownership. And so you could see that President-elect Trump is thinking maybe that he's got some wiggle room there when it comes to the implementation, finding another buyer, finding a way to do some extensions through his own presidential powers.
A lot of key takeaways there, Hermine. I'm sure this is a story we are going to keep on following. It was great to have you on the show this morning.
Thank you so much, Trinity.
Now we have a lot more to get to, including that opening bell, which is just about 4 minutes away. So don't go anywhere.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that markets pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we have this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, in just a moment, NYSE-listed company Corebridge Financial will ring the opening bell, and they are here to celebrate their second anniversary here at the NYSE. Now, Corebridge provides retirement solutions and insurance products across the United States, and the firm's portfolio also includes solutions for individual retirement. Right now, we're going to get images of the whole team up there on that bell podium above the trading floor, opening the U.S. equity markets. Let's listen in.
All right, we are officially off to the races here at the New York Stock Exchange. That was Corebridge Financial celebrating the opening bell with, of course, the NYSE president, Lynn Martin, on the podium there. And to talk more about these equity markets as stocks are higher today after what has been a busy week of a lot of data points is Jonathan Dane. He's a founder and chief investment officer at Defiant Capital Group. Jonathan, thank you so much for joining us on the show today. And as we watch this market open, how are you advising your clients?
Yeah, I appreciate it. Thank you for having me. So in this market today, it's interesting. After yesterday's pullback, we're telling clients this is really typical for after a presidential election year. Typically, markets after a president is elected, whether it's a Democrat or Republican, they will rally. And so you see a great rally in November. It's historically the best month of the year. There is usually a pullback in December. What we're telling everybody is this is a great time now where if you had cash on the sidelines and you were looking to rebalance or redeploy, if you were looking to put some money to work, great opportunity right now. We're optimistic on the markets, and we think you should be putting money to work.
So what were the most important points, Jonathan, that you heard from the Fed Chair Jerome Powell yesterday, both in the press conference and in that statement and economic projections?
When he was speaking yesterday, for us, it was a confirmation of what the markets have been saying. And that is, look, the incoming administration's policies are inflationary in nature. We've seen inflation come down, but it's still volatile. And so while everything seems to be trending in a direction of a soft landing, this also is an opportunity where we can slow down the pace of rate cuts and sit in a higher for longer rate environment. To us, that means that investors, it's not so much a negative, it's a great opportunity that the Fed sees a strong economy and they just want to make sure that all the pieces are in place for it to stay that way.
By how much do you think the market, specifically the S&P 500, can rise in 2025 on the expectation now that we will see fewer rate cuts?
We look at the market and we're optimistic on it. We think earnings have room to keep running. We think that if you look at the broad market right now, especially looking at, say, an equal weighted valuation versus the S&P, which is more tech heavy, there's actually room for multiples to keep going. There's room for earnings to go up with those multiples. And so while we don't think we're going to see another year like this where we're high 20s, 30%, we continue to think the stock market can outperform its historical trend at least over the next couple of years.
Interesting. And what's going to fuel that growth? Are there specific names or sectors, Jonathan, that you expect to outperform?
We absolutely think that, so one, strong economic momentum, the consumer continues to drive a lot of growth in the market. But if we look at it, so you can't not talk about the Mag 7, we think the Mag 7 still has room, but they're not going to run as fast. Instead, we look at the incoming administration's policies on energy, on infrastructure, AI and data centers. And so we look actually at the utility providers, we look at the infrastructure builders of this economy. We think there's a lot of opportunity there for them to actually run further.
Interesting. And in terms of what we see on the horizon for geopolitical risks, it sounds like obviously your outlook is very optimistic, Jonathan. But I do want to talk about some of the potential risks here that our viewers should know about.
Yeah, absolutely. I mean, there is so much geopolitical tension going on in the world right now. that everything has to be looked at. I think you have to separate the two from what's going on in the world to how is it going to impact the US markets. And right now with all the tension, a lot of it isn't quite trickling over to the US markets yet. We definitely see a lot of volatility around energy, what could happen there. We think that especially the tariff issues is a big deal. And if we go tit for tat again, we ultimately think that it's going to hurt the consumer in the US. But what we've been telling clients is if you go back and you look at the original Trump administration's policies, they've always started at the extreme. Extreme tariffs, extreme move all manufacturing back to the US. And that's a great place to start your negotiations. But ultimately, at the end of the day, there has been some type of middle ground. And so we think that there's going to be a lot of knee-jerk reactions, a lot of volatility from it, but ultimately things will stabilize a little bit and they won't be as bad as feared.
You know, we've been looking at the deal pipeline for a long time, Jonathan. Of course, the interest rate environment does impact that to some extent. When it comes to what we're seeing in the private markets, how might that move over into the public markets in 2025?
Yeah, M&A activity, especially private to public markets, has been very weak in 24. We are optimistic that, I mean, if you look at the financial sector right now, there is a reason that banks have rallied. There is a reason that people are optimistic, and that's because there's potentially less regulation right now. So we're very optimistic that, one, banks, even if rates stay higher for longer, there's a great opportunity for them to get their M&A pipeline back up. There's a great opportunity for more IPOs next year. We really think now is an opportunity for a lot of companies that have been staying private for longer to IPO and see a big push into that market.
All right, we will be watching very closely here at the New York Stock Exchange. Jonathan Dane, founder and chief investment officer at Defiant Capital Group. Jonathan, thank you.
Thank you.
All right, well, coming up, potential home buyers are asking if next year is a good time to buy. And our next guest will give us their takes up next.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like we have autofill for 3D. We can improve supply chain decisions so that you're able to find the same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been just fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. And that really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions, you know, is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live. I'm Trinity Chavez. We're here on the floor of the New York Stock Exchange. Now, mortgage rates are on the move. Housing affordability is a hot topic, and buyers everywhere are asking if now is the right time to jump into the market. Joining us to break it all down is Tom Pistillo and Mickey Conlon, real estate brokers at Compass. Good morning, gentlemen. Thank you for joining us.
Sure, our pleasure.
Yes. So, you know, Mickey, I do want to start with you. Talk to me about the biggest trends right now we're seeing as more mortgage rates are hovering around the 6% level?
Sure, that's a great question because that question is top of mind for buyers and sellers. Sellers who are locked into lower rates from days gone by in the 2s and low 3s are reluctant to give those up. And they've been putting their plans on hold, their family's plans on hold. Similarly, buyers have been trying to game the market, trying to figure out when is the best time to buy, when are rates going to come down to 4.5% again. And the good and bad news is they're not going to. So what this does is it gives people permission to get back into the market, to fulfill their personal needs, and to get comfortable with rates that historically are in line with what's normal.
But I do want to point out that I like to say that you're sort of dating the interest rate, but buying the property. You could always refinance at any point in or when those rates do drop. Isn't that right, Tom?
100%, and that's a conversation that we have with our clients every day. Because as Mickey was saying, we have people literally waiting to have another child because they're just waiting for these rates to change. And as he said, this is the new norm. They are not changing. We're going to be at the 6, maybe a little bit below 6 if we get lucky, maybe in the upper 6s, but this is the new norm. And as we say, it's always a good time to buy if it makes sense. If you can afford it on a monthly basis, it is always a good time to own some real estate.
And speaking of rates, Mickey, I do want to come back to you. When it comes to the Federal Reserve and all eyes are on the Fed dropping interest rates, what do you think the impact could be on consumer behavior and affordability in the near term?
Also a great question. So for the past couple of years, our biggest concern and the Fed's biggest concern has been to cool down inflation. And that was feeling pretty good for a while, of course, in the past couple of months. When the September rate drop, everybody was sort of ebullient about this possibility that would translate into lower mortgage rates. But banks were already factoring in those reductions in lower rates since last July. So what we know now is that there is an increased fear of increased inflation in the coming year. And the Fed's announcement yesterday that there will not be as many rate cuts obviously sent the markets into a bit of turmoil. But it's not something to be incredibly frightened of. Again, we expect rates to stabilize in 2025, if not come down. So for those who really need to buy or sell, now's the time to do it before prices increase.
And Tom, Mickey brings up a good point. Obviously, there's a lot to look out for come 2025 with the new administration taking shape, anticipated 2 rate cuts. The Fed announced just yesterday. Talk to me about how consumers can navigate through this volatility and an uncertain market.
Get a good broker. Seriously, I mean, we often say, you wouldn't go into court without an attorney, would you? So it really is. It's tough terrain, and it is difficult to navigate. But we are cockeyed optimists. We have been for the last several years. It's been a tough time through COVID and the last few years with interest rates. But we're cautiously optimistic that 2025 is going to be a better space.
And Mickey, I do want to go back to you real quick as we are anticipating the new administration to take shape come January. How do you think his policies will impact the overall housing market, especially when it comes to tariffs and deregulation?
So we have some concerns about the incoming administration's housing policies. The 3 pillars of the policy to increase housing affordability are deregulation, mass deportation, and building on federal lands. Because federal lands are mostly in rural areas, that doesn't address the housing shortage in urban areas. Deregulation may come at a cost that we don't yet know, and the bigger question is that are those savings going to be passed on to consumers? And then there's mass deportation, which is not going to free up housing because those who are being deported don't own their homes. And furthermore, that effect on the labor market is going to be significant and could raise construction costs.
Tom, we have about 60 seconds left. What sort of regulations can be implemented by the new administration to strike sort of that perfect balance when it comes to housing affordability?
New regulations, in terms of building regulations,
or even policies by the new administration?
Well, tariffs. I don't believe we've talked about tariffs yet this morning, but that could That could negatively affect rates as well, because of the trickle down to consumers and higher costs. But again, we're remaining optimistic.
We're remaining optimistic. There's going to be a lot to look out for come 2025, but is there any key takeaways that you think the consumer should know as we round out 2024?
What I would say to consumers is, and again, this is buyers and sellers, because both are sitting on the fence. And if you sit on the fence long enough, not only are you going to miss out on a great opportunity before prices go up, but you'll just wind up with splinters. You're going to feel really bad when you look in the rearview mirror and realize you missed some great opportunities.
Well, thank you so much. It was a pleasure having you, Mickey, and thank you, Tom.
Thank you.
All right, take care.
Thank you.
AI and technology continues to make an impact across every industry, including the housing industry. Judy Shaw recently sat down with real estate broker and television personality Ryan Serhant to talk more about it. Check it out.
A little bit of it was kind of coming out of stealth and letting people know that I had set up a holding company all these years ago called Serhant Technologies. What people know is Serhant, which is our real estate brokerage arm. But we have a host of subsidiary brands, Sellit.com, Serhant Studios, and now Simple, which is our AI service, which is the first large action model that I know of for salespeople, right? Replacing administrative work. And we've built really fast over the past 4 years. I think we're the fastest growing real estate brokerage that was independently funded by me. That I know of in the United States. And so now we're taking on outside capital in our first funding round. Was a really unique process, unlike anything I've ever done before. And was a lot of kind of internal soul searching of, was this something that I was going to do? But I think the market is demanding it. I think there's real need for differentiated value in the businesses that we provide. And I'm excited to present better service for our customers going forward and using this money to expand and fuel our growth.
You mentioned that you've introduced technologies like Simple. So how is this boosting productivity and reshaping real estate?
Oh my God, nerding out for a hot second. I created a bunch of other tech products before, and none of them worked. It cost me a ton of money, and it was a big learning experience. I hated it at the time, but I learned a lot while going through it. And then I sat back and said, okay, I'm a salesperson. I was in showings before this interview with you. I'm going to showings right now after you. What would make my life better? What would solve the problem that salespeople have? Which is you spend about 20% of your day selling, 80% of your day doing the administrative tasks needed to affect those sales. There's a lot of services, there's a lot of systems, there's a lot of screens now. It's great. Things are easier today, but they're definitely not simpler. And that was our aha moment. How do I make it simpler? What is the service that replaces that? Now, for people that can afford it, you could say, okay, that's an assistant that just does all the stuff. I'll do what I do best. The average salesperson can't afford that assistant. They're not making millions of dollars a year, let alone hundreds of thousands of dollars a year. The housing market is slower this year than it was last year, and last year was the slowest housing market we had seen in 30 years. So how can I support that agent who is building? So Serhant agents, on average, are about 20 years younger than the national average. That's not by choice, that's by the inbound demand for the agents that appreciate what we're doing and how they're building their businesses and their brands. And using Simple, we take on that 80% of their day. So then what do you do with that time? You spend it with your spouse, your kids. Maybe you sleep a little more. It's hard to sleep when you're in sales. You work 7 days a week. Or you do what you do best, but you do more of it, which is selling, which is working with other people, which is finding those buyers and those clients and not worrying about the minutia that every other firm that I could have gone to says, okay, we're going to make it easier for you to do it, but just here's another thing and another thing and another thing and another thing, as long as your iPad's plugged in. I don't want to do that. That doesn't make sense to me. That, in a nutshell, is what we're doing. Well, that's my mission, to make salespeople's lives better and to increase their income so that they can provide more for their families and for their customers. Being a salesperson myself.
One part of the wedding process is getting a full makeover. Stay tuned for those details.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improve their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them, and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, we are just 20 minutes into the market open on this Thursday, the first full trading day after that Fed decision and outlook yesterday afternoon. And we see fractional gains across the board. In fact, the Dow up, as you see on your screen, close to 300 points, or about 0.7%. That's after the Fed Chair Jerome Powell noted yesterday that he is, quote, very optimistic, end quote, about the economy. The consumer is still spending, and certainly the revision that we got to third quarter GDP earlier this morning indicated that as well, as the U.S. economy grew 3.1% from July through September, higher than an earlier read of 2.9%. Well, a major player in the wedding space is making some major moves, and Trinity Chavez is on the trading floor with more. Trinity.
Hey, Kristen, that's right. David's Bridal is stepping into a whole new chapter, blending the worlds of tech, media, and weddings to revolutionize the bridal market. With the launch of the Pearl Media Network and the acquisition of Love Stories TV, the company is opening up exciting opportunities for advertisers and expanding its reach in unparalleled ways. Joining us now to talk more about this and all of the bold new moves is the Chief Business Officer of David's Bridal, Alina Vilk. Thank you so much for joining us, Alina.
Thanks so much for having me.
Now let's talk about all of these major moves that you're making in these spaces. How does this acquisition signal the future of the bridal industry in terms of digital transformation and media consumption?
Look, I think it's a really fun time to be alive and be a bride. You can find inspiration, with thousands and thousands of videos, and we're seeing a huge trend in terms of social media that the majority of planning is now happening on social. So brides are actually looking, 2/3 of couples are going to be choosing their vendors from things they've seen on social media. And so us pairing together with Love Stories TV and creating Pearl Media Network, we're so excited. David's already has 90% of all brides. So we're really going to catapult that experience and hopefully make it an amazing one. So taking the stress out of planning.
And why is this market of brides and future brides primed for targeted content?
Because brides and future brides have completely different media consumption trends, especially pre and post engagement. And so thinking about their consumption, they're spending hours and hours and hours looking at inspiration and content. When you're looking at the average engagement now, it's about 12 to 18 months. So the inspiration cycle has increased. And you pair that with couples who are now together an average of 3 years, you have 5 years of content that you're consuming specifically around weddings. And so this is a prime market for us, and really a way for David's Bridal to move out, not just be the name in dresses, but be the name in all things wedding.
Now talk to me more about why David's Bridal is moving into the tech and media space. What does this mean for advertisers and SMBs as well as consumers?
The biggest thing that it means is that we have the audience. And with Love Stories TV, we have even more of the audience driving through. Like I mentioned, we have 90% of all brides coming to us anyway. They're going to be in a David's Bridal online. They're going to be on David's Bridal stores. They're going to consume inside social media. And so thinking about that and thinking about this audience and thinking about the fact that it's first party, connecting that bride and that groom at the point of household formation. They are now cohabitating, they are now getting together, and they're making all the biggest decisions of their lives. And we can connect now this audience to brands. And so in this transformation, in this journey, we are doing just that. It is live and we're ready to go.
Now, I do want to talk to you quickly. We have about 60 seconds left. What would you say is the best time to buy dresses, and what trends are you seeing right now, especially as we move into 2025?
Well, the best time to buy a dress is right after you choose your venue. And for this means various things for different brides, but it's an average 8 to 10 months out. And we're moving into what we call Bridal Christmas, which starts the day after Christmas Day, December 26th. We're seeing a peak in engagements, and actually more engagements than ever before. We're going into the golden age of love, so the next 3 years. So we're really excited about that. And we're going to see some other really fun trends in terms of getting dresses for all kinds of occasions. So you're now getting a little white dress. You're now getting a dress for your engagement photo shoot, and so on and so forth. The average bride's going to get anywhere from 3 to 8 dresses in the entire wedding journey.
Well, thank you so much, Alina Vil, Chief Business Officer of David's Bridal. Thank you so much for joining us on the show this morning.
Thanks so much for having me.
Now, 2024 has been a year to remember for the New York Stock Exchange. So here's a look at some of the biggest highlights to remember, because it happens here.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.
Welcome back to NYSE TV Live. I'm Trinity Chavez on the trading floor. Now, as we get ready to say goodbye to the show today, we're wrapping up. I do want to bring in my colleague, Kristen Scholler. Kristen, I mean, did you hear the interview that I just had about David's Bridal? I mean, it was very reminiscing. I know that I went to David's Bridal myself when I was looking for wedding dresses. I must have tried on like 60.
Trinity, I love that human element to the story as well. I was listening to it. Look, we have had a banner 2024, and whether it was that interview that you did, of course, the other guests that we've been hearing from throughout the show, and of course, that incredible video that we just played about everything that's been happening here at the Stock Exchange. We look at the markets because we cover them on a regular basis, and we see the S&P 500 up about 24% this year, with the Fed indicating yesterday it's very optimistic about the economy ahead, and market participants still expecting gains in 2025. It's going to do it for our coverage today on NYSE TV Live. Thank you everyone for watching as always. For Kristen Scholler, Trinity Chavez, and our entire team, we'll see you back here bright and early tomorrow morning.
life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.